Thank you very much, Dr. Mitra. It's indeed a pleasure listening to you. Ladies and gentlemen, moving forward on to the panel discussion of the evening, I would like to call Mr. Niraj Shah, Anchor Markets ET Now, to please come on stage and take this session forward.
Well, actually, I'd love to have the panelists on stage as well. Actually, can we have the same request for all the people in the audience as well? If you've just joined in late, kindly switch off your cell phones so that we're not disturbed. All right, welcome to this event. I won't take too much of your time, but if the stock markets are anything to go by, a lot of these small-sized and mid-sized companies have already done very well to tide over the crisis, but clearly that is probably not the case. And the discussion that we'll have in the next half an hour to 45 minutes will probably give us some insights as to what some of these companies have done and what some of these very eminent people who interact with these companies day in and day out have observed in these companies, and probably give us an insight as to what to do going ahead as well. Let me take a moment to introduce all my panelists. I'll start off with Ms. Roopa Kudva. She is the MD and CEO of CRISIL, India's leading ratings and research risk and policy advisory company, subsidiary of S&P, and of course, she also the region head, South Asia S&P. Need to say just one small point that I observed in an introduction that was provided about Roopa. She was one person who landed up in the CRISIL office, Roopa, if I'm not wrong, gave a cold call to the head out there, and ended up getting the job in the next 1.5 hours that followed. So, Roopa Kudva, can we have a round of applause, please? Mr. Puneet Chaddha, he's the head of commercial banking for HSBC in India, covers a wide spectrum of businesses ranging from microfinance, SMEs to corporate banking. 17 years in a single organization, that's a long time, Puneet. And of course, he's climbed the ranks and heads the commercial operations as India. So that calls for a round of applause as well. Will give us an insight into a lot of issues and a lot of things that banks could probably do for SMEs as well. Puneet, thanks for joining in. All right. Thirdly, we have Mr. Sanjay Sethi. He's the IAS and Development Commissioner of Industries, Government of Maharashtra. Many thanks for joining in. He was also the director, and correct me if I'm wrong, of Maharashtra State Electricity Transmission Company and the Secretary for the Maharashtra Electricity Regulatory Commission. All right, I am correct. Many thanks for joining in. Two companies that we have out here, and I'll start off with Dr. Kailash Gupta, Chairman and MD of Commercial Engineers and Bodybuilders Company Private Limited. 40 years of automobile experience, does a lot of stuff, also has car dealerships, would provide us an insight as to what one of the industries which provides leading employment to the country went through and is probably going through at this point of time as well. And lastly, we have Mr. Vijay Karia. He's the Chairman and MD of Ravin Cables Limited, strong global presence as well. And again, an SME, if I'm not wrong, and would be insightful to get his experiences of what happened in 2009 and what they're currently going through as well. Ladies and gentlemen, many thanks for joining in. Roopa, let me start with you. In fact, there are a couple of things that I've noted from various reports that I read before coming here. And one of the reports stated that, I'll read out, it's a lethal cocktail of falling sales, rising inflation, increasing input costs, and drying cash flow, topped with the US economy slowdown that is hurting the Indian industry hard. Now, but for probably falling sales, the rest of the things are still with the Indian industry. How far have we come in the recovery process? And how far to go before we can probably say with conviction that we are somewhere in the middle or safely out of the woods?
Let me present a contrarian view to the statement that you've just read out.
Sure.
And I think, the key to understanding how the mid-sized corporates in India are tiding over the global financial crisis lies in an understanding of the credit quality trends that we are seeing. And there's a very interesting trend that we are seeing. In the last 6 months, there has been a reversal of the credit quality trend that we saw for the last 4 years. For the first time in the last 6 months, upgrades that CRISIL did exceeded the number of downgrades. So we had upgraded 109 companies in the last 6 months and downgraded only 92. Mind you, this is a very, very significant observation and a very, very significant turning point, because this is based on a sample size of 4,000 companies, about 90% of which have a turnover of less than 500 crores. So I think nothing tells the story of the changing trend or the arresting of a declining trend in creditworthiness that we've seen than this one statistic. We all know that economic growth has picked up. We all know that demand is more buoyant than it was 6 months ago across a wider range of sectors. And so surely there's a lot of positivity and there's a lot of optimism all around. Underlying this optimism, however, I think there is still, if I may say, a note of fragility under the recovery. And why do I say that? I say that because out of these 4,000 companies, there are still 13.5% or about 420 companies which still have a negative outlook, as opposed to 105 which have a positive outlook. So we are saying that things are looking up, things are definitely looking better, and we can talk about some of our observations that we've seen about how the mid-sized companies have responded to the global financial crisis, and I can talk about that in the next segment maybe. But suffice it to say that we believe the tide has turned slowly but surely. Some areas of concern remain, but there is enough on the table to be very optimistic about.
Puneet, you agree? I mean, again, some reports stated, in fact, I believe Roopa had stated this some time back, that a lot of banks are not lending to corporates simply because they fear the risk of rising NPLs. This was, of course, way back, probably end 2008, beginning 2009. Are you seeing a change in trend right now in terms of corporates being credit-worthy enough to demand this kind of fund disbursement from banks?
Yes, I think the answer to your second question is a resounding yes. There's clearly an improving trend in corporate credit. There's more liquidity in the system, so you're probably finding a lot more bankers out there looking to increase their asset size or the loan book. But let me go back to your first question, which is probably a self-indictment of sorts from a banking fraternity point of view. I think when you go back to the middle of last year, a lot of the problems or the hesitation that banks had to lend money to corporates in India was probably more to do with concern that the money that was being lent to those companies was actually going to repay other banks. And it wasn't so much about the credit quality of the company itself. And that was because liquidity was being sucked out of the system. Banks were looking to conserve capital, and even the corporate world was probably facing a severe liquidity crisis. And you didn't actually know what the end use of that money was going to be. The underlying model of most companies was actually quite solid. Now, I think with the improvement in credit outlook, with the improvement in liquidity, with the improvement in the outlook for banks themselves, I think there's a much greater degree of trust amongst the banking community and amongst the corporates themselves. And therefore, you're probably finding a lot more credit going back into companies.